Welcome back to Primary Source China Investment. We recently had some feedback regarding the markets section and how we can make that a little bit more actionable. So this week, beginning with show T, we're going to do just that. So this week on markets, as promised, we wanted to talk about some actionable things. And we're coming to the realization that investors still don't understand the difference between investing in China, which is strictly AShares, and overseas listed stocks. DIDI got a ton of attention, and rightfully so. But DIDI is a Chinese company, but they are listed in the US. And so I wanted to take a look this week at the largest listed Chinese companies in the US, see how they performed versus the AShares. And what I'm looking at is specifically from July 2nd, which is right after the DIDI IPO, and everybody got paranoid about data requirements for Chinese companies listing in the US. So there's 10 of these companies, and we don't have to go through each one of them, but you will not be surprised. Every one of them is down since July 2nd. Obviously, DIDI is down the most, which is something like almost 23% since July 2nd. They are all down, everything from NIO and Alibaba and Bilibili and Pinduoduo, all of them down. Interesting, the ETF that we've talked about in the past, KWEB and PGJ, also track a lot of these US listed high flying tech stocks. And no surprise, they are also both down. KWEB is down 7.71 and PGJ is down 7.98. The interesting thing here is AShares were actually up in that time period. So the CSI 300, which is traded here in the US as ASHR, was up 1%. Now, that's not great, but it was up. So the outperformance is significant. The other thing I wanted to focus on was the difference between PGJ, KWEB, and AShares over a slightly longer period, because something did happen back in May. If you look at AShares versus KWEB, PGJ, and we're going to put up a chart and we'll talk over that, the outperformance has been significant for the last 6 months, upwards of 15%. So there is some disassociation between AShares, which are onshore in China, and Chinese listed stocks here in the US. Investors are beginning to differentiate the two.
I think based on our experience in the China market, it's always get a volatility. So such kind of volatility is not surprise us at all. We get tortured every single week. So this is, I think, this is why we always think about how to hold the uptrend period for the stock. For the entire, for example, like the KWEB, is really the peak week is in February 19. That is really show the peak. And also, if you don't know that, the second week, February 26, that's pretty much means the end of the uptrend. So obviously, it's keep the entire downtrend. It's super duper clear, KWEB.
Yeah.
So that is no doubt with that. So many reasons behind that. DIDI just a part of it, and even before the DIDI IPO, Baidu, Alibaba, and Tencent, they already get the government monitor or take the actions to check them, and so the price get dropped. But I just want to remind it, right now it's really the KWEB and the China overseas companies. They show the bottom symbols. So they already reached, like if you said, monthly chart, they already reached the 30-month moving average. And also there's a lot of the short-term bottom symbol for those things. So they might stay in the bottom for a while. It doesn't mean they will be bounced back right away. Hopefully, after all the government concern get resolved and all the execution or improvement that the company implement, you will see they probably get a bounce back again.
Yeah, the news cycle's fast. People are very focused on this right now, but in a few weeks, I'm absolutely certain there will be something else. Maybe it's the Olympics. Who knows?
Yeah, that's right. Yeah.
Yeah, the news cycle's fast, and volatility. We are no stranger to volatility when we are looking at Chinese stocks. So there's no doubt. So this week on policy, we wanted to focus not so much on the headlines because there's a lot of headlines. Just this week, we heard more information regarding DD about China's data protection. We also had news that Hong Kong IPOs may not be subject to China's cybersecurity reviews. And then we had the Biden administration warning investors and individuals about doing business in Hong Kong and the risks of doing business there. And then they also sanctioned 7 individuals. All of this is going to continue to get worse before it gets better. But peng.guo and I think there is a bigger development this week, and it's on the China policy side. Way back in show C, we covered free trade zones. And while I remain overall skeptical, there's no doubt that the leadership is trying to do just about everything to continue to be competitive and to attract investment. Just this week, central government granted the Shanghai municipality unprecedented latitude with respect to taxation in a number of industries, specifically semiconductors, artificial intelligence, biotech, and civil aviation. The government regards these industries as key to the growth going forward. Conveniently, these are also industries where foreign firms are either banned or discouraged. The new policy allows new institutions that go to Shanghai to enjoy a discount on taxation for the first 5 years. So is this going to work? I don't know. We can't be sure. But what we can be sure of is that policy from top to bottom is going to continue to put out idea after idea after idea.
We probably should first starting from the big picture. First things, if we start from big picture and the history, so we can understand much better why China is doing this. Firstly, I just recommend spend less than $100 to buy some history book, just read the recent history in China. And secondly, I recommend think about it from how to manage China, this country perspective. So rather than this is like the big picture. So what's the current problem? How to resolve it? I think the government is really thinking from this way. So right now, China already get some of the accumulations and get rich for a few peoples, but still face a lot of the problem and the challenges. And the reason that with the DD and whatever, the internet giants, there's many reasons behind that. So I think at least from the official perspective, they thought those big platform is from the internet innovator become the monopoly. So this is this stop the innovation. So that is like the official explanations. Before you talk about something, you get a little bit background and knowledge on that. But in reality, most people have a lot of the piece or tiny things on the background, and they make the comments and they take the big actions. So that causes the problem. And secondly, you want what China will do for the next step. I think China is still trying to integrate the international society. And right now, it looks like get a lot of challenges in here. So what China to do is that they have the free zone. They have they try to open a door in the certain area, but they don't want for the entire country, which is make them totally out of control. So Shanghai obviously is the pioneer for the innovation or whatever new policy to doing that. The good thing is while you deal with those people, they have more knowledge and experience to handle the international things. So really, like the tax cut doesn't make too much sense unless you make the profit, right? Or you think about how to make the money, and then talk about tax. So this is, and secondly is to try to figure out which place you might get the long run to run the business. That's many cities in China. They have the free zone area. They're different infrastructure, the different governance level in those free zone. So it's better to still with more experienced people, or at least you can hire the experienced agency, employee, or find the experienced local partner to help you solve some problem.
Yeah, that's a little bit like the supply chain. You make
exactly
X product, but your suppliers are also nearby. China now has 21 or so trade zones, or they're changing the name. They're calling them pioneer zones or vanguard zones, and
exactly.
Not all of them are going to work, and a couple of them definitely are struggling. Dalian has been struggling since it started. It didn't get the investment, and there's this China, Malaysia, Qinzhou industrial park in Guangxi province of all places. So, not everything works, but they are going to continue to try to, implement policy domestically. And I think that's the same thing for all countries. I look at the US, this infrastructure bill, whatever happens with it. And then, Biden administration wants to throw another $3.5 trillion onto the fire. Whatever the case is, countries are going to continue to push their domestic policies. And we shouldn't lose sight of that, even though the headlines tend to be dominated by controversial items. Domestic policy is probably more important than international policy.
Yeah, I agree. Not all the trade zone will be successful, and China don't expect all of them successful. At least one or two be successful. That would be great. Like the Shenzhen, nobody think about it as long as right now it grows up. I think next is a really big thing is for the Hainan free trade zone. So this is pretty unique and totally different. I know this will get attention for all the government and all the ministry department support. So they really try to make this one I think much bigger than Hong Kong, and they really make it like the international and the entire legal system is totally different from others.
Yeah,
so we get a best resource in the Hainan province. So whoever interested to know more information, we would be love to help you connect to the best resource in that area. I think right now, this already have the 50,000 young people go to the Hainan capital city. The HR department is super busy every day. People just have because in 5 years later, no, right now it's 4 years later, the island will be closed. It will be totally free zone.
Yeah, I think maybe Hainan will actually have to compete with the greater Bay Area, right? This is like two different areas, but looking to focus on some of the same things.
Yeah, you have to select the right industry to do it.
Yeah,
I think Hainan is really like the vacation area. They plus the green finance, and also they plus the medical and the high end of the service provider. So which that place is, as I know, is in China. That's a huge demand, and it's a really big market. Theoretically, you can connect to pretty much all the industry in China.
Great. Well, we'll put a link in the description and make it easy for people to reach out if they're interested in Hainan. Well, this week, we're going to leave it here for Show T. Thanks for tuning in. Please hit the subscribe button. And remember, if you make a suggestion, we implement it immediately. So thanks for tuning in.
Thank you.